Eric Muathe with Muathe.com. Now this is a follow-up video, and this is pretty much me doing my own research, trying to go back about 1 year ago to figure out what my reasoning was as to what the market could have done as of mid-February 2016. So to understand this video, you have to go back to the initial video, which is the one that I made in 2016, about 1 year ago. And then also check the follow-up, which I did yesterday, this one here. And I'll have all these links in the description, don't worry. So you have to check this one out, and then also take a look at the my current world market analysis, which I just recorded about 2 hours ago. So to understand this current video, take a look at these 3 videos, because we go back to the 2016 February lows worldwide pretty much. And so we go back to February 16th, 2016. These were major lows as far as the markets were concerned, as far as the US markets were concerned. But of course, we did not know that at the time. So I've gone back, tried to look and see what, if anything, there could have been that could have given us an idea that the market was making a major low. Keep in mind, as of right now, 1 year later, the Dow is not trading here on the RSI or here in terms of price. It is actually trading at substantially higher price levels. So my own research into my own personal analysis is to figure out what I was thinking here and how and what I can learn from that thinking. So understand that this is what the context of this video is. So this is the monthly chart for the Dow 1 year ago, and if I draw a line here, I can see that this gives us uniformity support. Now keep in mind, I've been trying to explain here that when markets are forming uniformity, it is the most difficult thing to understand. All right? It's so hard to understand. Keep in mind, this is what it looked like on the 16th of February 2016. Right? Very confusing. Again, that's what it looked like. Is the market breaking down or is it breaking out? Right? It's you can't really know at the time. With the benefit of hindsight, we know it bounced. But at this point, it could be a fresh break leading to a major correction. All right, now keep in mind, at the time we had bounced off here, come back, we are testing the lows here. So it's anyone's guess, are we going to be trading here in the months ahead? So we did not know that at the time. But I want to show you throughout the course of this video here that there was some signs. Now that I go back and check, if we take a look at worldwide markets, if you take a look at the whole lot of the worldwide markets, some of them were already pointing to the potential for a bounce. Now, of course, they could have gone on and failed, right? We are looking here. The market always has a million possibilities. It could go up, it could go sideways, it could do all sorts of things. We are looking here at a situation where the market bounced, but it could have gone down. That was also an option. But what I want to show you here is we're going to take a look at many worldwide markets in February, on February 16th. Look at their charts on the monthly chart. We are going to learn that if we just take what the monthly charts were saying worldwide, there was indication that the bounce was going to take place. Now, let me show you the current monthly chart for the Dow before we begin the exercise here. And now we can see that this is so obvious. Entry here. We draw a line from here, which is our uniformity support line. And with the benefit of hindsight, take a look at this double bottom support during the lows here and here. We tag the same line here during the lows there, and here during the lows here, and in February at the lows here during this bounce. And since then, it's pretty much been a good market to the upside. Right? We cannot argue with what happened. That's what happened. It's a fact. Now we go back and take a look at other markets. So I'm going to go one by one, take a look at other markets. Let's begin with the Australian market. This is February 16th for all of these charts. We can see here that if we take this off the lows there as an example, draw a line here, we could have seen that the Australian market itself was also coming back to test this line. Now it has not bounced yet as of mid-February, but it's coming back to test this line. Right? The last time it tested that line was here and it held. It held here again, which is here. And now it looks like it could break or find support. So we don't know at this point. Let's move on. Take a look at the Chinese market. Now this one was already up 3%. Keep in mind we have that 1% rule. And here this 1% rule is taking place on the monthly chart. And we can see this makes a lot of sense without knowing what the future brings. This market was hinting at the potential for a bounce. Why? Because this was the entry of these major lows before an explosive market took place. We pulled back significantly as far as the Chinese market is concerned, but month to month as of mid-February, this line was holding. So that was indication to lean towards major support in other markets. All right, let's move on. We take a look at the Japanese market, and here also we are coming back pretty much to test this entry in 2012. This RSI movement brings the market higher, and now we are coming back and we are testing that line. Have we found support? No, but we could find support, right? I mean, this is scary if you are owning the market here, because this is a steep drop in 3 months. So you don't know that this is going to be support or break, but you're leaning because you've seen one other market, which is the Chinese market, so far find support. All right, let's take a look at the Hong Kong market, and we are coming back to test the lows line of 2009. Right, we can't argue with that. This was a nice entry on hindsight. Market recovers off the major bear market lows. We tag that line here off the lows here, and now here we are in 2016 mid-February. So are we going to bounce? Are we not going to bounce? We don't know at that particular point. Let's move on. Take a look at the the Singapore market, and here a different take. Lower prices month to month, a slight improvement on the RSI as of mid-February 2016. Also, that positive divergence comes with rejection when trying to drop below 30.9. And we can also see that now there is a line connecting the lows. The low here, the low of 15 and the low of 16. Seems like that is decent enough support. Wouldn't you agree that the market is now showing that it is constructing a line of support? Of course, we don't know that that is going to break by the end of the month or the following month. We don't know. But all we can see is a potential for support. So I think that looked like it could, at that time, be hinting to a potential bounce, but it's only up 0.59% as of mid-February. So you really don't know which way to take, right? And we can't draw on this one, we can't draw our uniformity support line because the line would be much lower, because this was the entry of the lows here. So our uniformity line would be forced to draw it here. And we are not at that level. But we can see uniform activity support at 30.9, sorry, here and here. And also again, it's very early on, but this looks like it was showing support. And don't forget the positive divergence. Let's move on to another market. So we're trying to use long-term monthly charts to give us a picture as of mid-February 2016. Here we have the Japanese market, and the Nikkei here came off the lows of 09. We draw a line from here, and as of mid-February, it is coming back to test that line. Is it going to hold? Is it going to fail? Tough to tell at that point. We take a look at the Bank Nifty. By the way, let me correct myself there. I was talking about the Nifty, not the Chinese market. So the Indian market pretty much coming back. This index was coming back to test that line. Is it gonna hold? Is it gonna fail? All right, let's take a look at the Bank Nifty. And also it was coming back to test the uniformity support line coming off this break here. So these are major consideration for market participants, and everybody's grappling to understand what's going on. Are we going to find support here? Are we going to fail? If we fail, it's very bearish, but boy, if we find support, it could be good like this period here, good like this period here, good like this major lows. All right, let's take a look at another market. Take a look at the South African market, and it was coming back to test this breakout here. At that point in February 2016, it was coming back to test the RSI 50 level. Is it gonna hold? At that point, we did not know. We take a look at the German market, and we are also coming back at that particular point to test this level. So the picture that was developing at this time worldwide is you can see that many markets were suggesting that this is either support or failure, right? We take a look at the next market, which is a French market. And here also we can see that it was coming back to test this entry. We can use this entry here for relevance because this was the low in 2012, most recent major low. It was pretty much coming back to test that line. Now that line had been successful because if you go backwards, you can see once we move back, once we recapture above that line here, the market made a low. We bounced on this same line of the lows here and here. We went back above the line of the lows here. And now we are coming to test that line. Are we going to find support or are we going to fail? Of course, at that particular point, we did not know. Take a look at the FTSE. So the FTSE also coming back to test a major line, which is this line here. Off the lows, major lows, after a nasty bear market worldwide here. We recover finally. So this recovery is a major low. So anytime we bounce on this line with uniform activity, we know that we should be positioning ourselves for a bounce. We came close here and held the lows of 2011. We've tagged this low as of 2015, held for 1 month, but rolled over the next 3-4 months. We are coming back to test that same line as of mid-February 2016. Are we going to hold? Are we going to fail? We don't know, right? Let's take a look here. Oh, that's the last one. All right, so those are the instruments that, oh, you know what? Let's take a look at Canadian market. Give me a second. Let me add the Canadian market. A particular point. All right, Canadian market as of mid-February also, it was coming back, and in fact here, we can see that it wasn't back to support. Support would be much lower here. So at that particular time, that market was not giving us an idea of what to do. Keep in mind, it really had a major drop here. This is more than a 20% correction of the highs here. Major correction here. So this is scary times as far as the Canadian market is concerned as of early 2016. Take a look at the Brazilian market. See what we get. And here we can see that it was also coming back to test this line. I'll draw it like that. Okay, now if I take the actual lows here, this is the lows on a monthly closing basis. If I draw my line slightly lower here and I draw it like that, you can see what it gives us. It gives us interesting data points. Support on that line for the lows here, support on the line with uniform action for the lows here, support here for the lows here, support here for the lows there, and we were testing those lows as of February 2016. Let's take a look at the Chilean market. Bear with me. And we can see that this random market that is doing great as of 2017 was coming back to test these lows here. And in fact, this market, keep in mind, this was the lows of the major lows of 09. We had bounced here off the lows here. We had bounced on the line of the lows there, and we had already seen double top or double bottom as of late 2015. So this market was hinting at a possibility of a bounce on this monthly chart. So take a look here at the Argentina market, and here we can see that as of mid-February 2016, it was also coming back to test this line. Was it gonna bounce? Right, at the time we did not know, but this one looks like it is one of the markets that was holding up better than most. Here, that was a good support level. Now keep in mind, at the time you don't know whether it's gonna find support, or maybe it's gonna do one of this, show a major break, but at least you can see signs of potential support. It's up about 2%, so this monthly chart was encouraging, I would say, given just the way it was setting up, right? Now as we come close here to the conclusion of March trading for 2017, these are some of the considerations that market participants have to consider. Now right now the market is closing, so there you have it. We've closed for the month of March 2017, and there is the close. The reason why this is relevant is, keep in mind, I did mention at the beginning of the video, for this video to make sense, you have to watch this in conjunction with my current world market analysis. Check the description of this video for a link going into that, because this ties into what I'm about to finish up with this video with my discussion. And here, let's finish up here, and we can see that if we take a look at the Swedish market as of February 2016, we were also coming back to test this entry of the lows. Now how do we draw this line? Pretty much figure out where the market started behaving well. Use the chart itself. Here we are using the chart to tell us that if we draw a line from here, any type of uniform activity, so we are using the chart itself, not just generic analysis. We are using the chart itself to try and understand what itself responds to. And we can see here it chose to move above this level here. It did this on its own, which is off the lows here. We haven't been back to those levels, so the chart is telling us that this is what it responds to, or has been responding to since 09. And we can test that because uniform activity, support below it and back above it for this re-entry. We come close here for this re-entry, and here we are coming back and we are just about to test that as of February 2016, but we don't know whether it's going to be a break or it's going to be support. Let's take a look at two more. Take a look at the Mexican market, and we can see that it was also coming back to test this movement. Now this is worldwide. As of February, most markets were down, and this market is just now coming to test this level here. You don't know that this is going to break and go below 30.9, or maybe it's going to bounce and give you an opportunity. You don't know that at the time, okay? But you're watching for that potential. And then let's take a look at one more, which is the Italian market, and it too was coming back to test this off the lows. Now most markets made their lows here, and you can say it made an intraday low here, but the Italian market tested the lows in mid 2012. So this is where RSI movement brings the market off the monthly lows here. So the monthly lows is here, not here. So we have to use the most relevant entry. In other words, figure out what the market itself is telling you as the major low, and this is where the RSI responded. By moving above this line, it hasn't looked back. But as of mid February 2016, it was coming back to test this line. And it was scary because you come from here and now you're here. You don't know that you're going to come and test the lows of 09, the lows of 2012, and by coming back here. What's the point? Let me explain the point right now. If you watch my video, which I recorded today, this video right now, without adding any type of color, no bias, none of that, I can see here that the markets worldwide as a group, they are all pointing to potential for major monthly resistance. I mean, if you take a look at this video here and just be neutral, you cannot help but get the sense that if the markets don't clear the resistance levels I discussed in this video, we are due for a major worldwide high, which might suggest a major worldwide pullback and a major potential for a major bear market if the monthly resistance are confirmed in the coming weeks and in the coming months. The moral of the story here being that we always, at critical junctures in a market, we need to account for bigger picture, not just in your markets, but especially if it aligns with other markets across the globe, markets that might have different dynamics, different reasons why they're behaving the way they are behaving. If you can align major turn points in other markets that coincide with the current market you're trading in, chances are you might have better timing. Now let's take a look at the same charts we just looked at, but now with the benefit of hindsight. So this is a current monthly chart for the Australian market. I'm going to do this quickly, and we can see that as of February, it actually held the line and bounced. So it found support at the beginning of 2016, which was the lows we just discussed, and it bounced to the current highs as of March. Let's take a look at the other one we considered, which is the Chinese market. It also found support with uniform activity here and bounced right there. So most of the markets as of February were pointing to possibility of a bounce. Japanese market also held the line we drew, which is it had come back to test this line. In fact, it would test it again later on in the year and found support on the same line before the eventual recovery. It took it many months, but the line held. We take a look at Hong Kong. You can see Hong Kong had come back to test the line as of February, and it held. Since then, it went from here to the current highs as of March. We take a look at Singapore, and here we had seen double bottom support at the time. That support held, and we also see that it bounced and found good support above 30.9, and also we had positive divergence in that prices made lower lows here, but we saw an improvement on the RSI. So that was good enough to record the lows here, and eventually you see that it is higher 1 year later. So those were major lows. We take a look at the NIFTY, and clearly it had come back to test this line as of early January and February 2016. It held the lows here and now trading here. So those were major lows, and coincidentally the entire world market complex looked the same. Take a look at the BANKNIFTY, also came back to test the lows, these lows here from 14,000 to the current highs close to 22,000. So those were major lows that we were looking at. Take a look at the South African market. At the lows of 2016, it held with uniform activity, which is the lows here, before it could go on to record a nice recovery as of mid-2016. We take a look at another market. Take a look at the Canadian market, and here we see that we take this line here. I can go back this way. Entry off the lows, uniform activity off the lows here, come close here off the lows, and as of early 2016, uniform activity below the line, back above it. So here we can see the Canadian market, the line actually comes from the lows here. And that line, so let me draw that line properly here. So bear with me, it's a lengthy video, but man, is it a good one, at least as far as I can tell. So we can draw it like that. And of course, uniform activity below the line, back above it, the re-entry after you see uniform activity gives you the idea it's a major low. You come close here, major low, uniform activity, you tag the line there for 1 month support, you go below it but recapture the level back above the blue line with uniform action for this re-entry, giving the market a chance of moving from here on a monthly closing basis to the current highs. Let's take a look at what we have here. Already seen the Nifty. Let's take a look at the Italian market at the lows of last year, and we drew this line here. Now this market took a while to find support. In fact, you can see that this is not the low. It actually breaks down again. So this market acted differently. It broke down again, but ultimately you can see that the line held. Prices did not, but the RSI held. After trials and tribulations here, these were lower lows than the February lows. Ultimately, we find this little bit of an uptick. More importantly, the RSI uniformity line held. It took many months though, so we have to acknowledge that this was not a straight bounce. This line did not give a straight bounce, but what it did, so if you try to go along here thinking that this market would hold, it failed. But ultimately, RSI holds, prices don't hold, they go lower, but we can see that in the very end there's a little bit of a recovery. Not the best, but other markets were doing better is what I'm trying to say. And let's take a look at the Mexican market here, and we can see that this line held at the lows. No, in fact, you know what, hold on, maybe I'm not looking at this properly. And you can see here, as far as the Mexican market is concerned, not the best support. In fact, it recovers as of March 2016, but stalls. Okay, and ultimately makes lower lows as of late 2016, early 2017. But take a look at the difference here. Is even in this process of making lower monthly prices, RSI shows an improvement. Now this one did not recover like the rest of the world markets. Maybe we can spend a second and see what happened here. And from what I can tell, there seems to be a line here, and that was the break of 2014. Brings the market lower here. We try to move above this line since that break, and as of right now we've not really been able to move above that line. Even at the end of March 2017, we are back to this line. So either it might continue to be resistance like it did here, resistance here like it did here, also rejection when trying to move above RSI 50. That's a big deal. And now we are ending the month of March around this level. So again, this also ties down to my world picture right now, that more than likely there's a possibility that many markets across the globe might actually show monthly rejection. If they do, even the Mexican market might be poised to trend lower, would be my suggestion. Otherwise, if it is to do well, it would need to move above that red line and move above RSI 50. Alright, it's gonna be the last one here, and this is the Argentine market. And what we're gonna do is just draw remember we had looked at this as of February 2016, and there was a line of support at the time right here, right there actually. And this market was behaving better than other markets in February 2016 because this was holding, which was the lows somewhere here. And in fact, it looks like if we extend the same line because markets have an amazing memory. We extend the same line, we can see again during the year of 2016 it bounced on this line a couple months later, which is the lows somewhere here, and since then this market has gone on to record fresh highs. So the main reason why I did this video was for my own personal learning experience. I always make a point every now and then to go back and look at my previous analysis, especially where I was wrong, and figure out what I could have done differently. So that's the moral of this video. It's actually meant for me, but I hope you get some little bit of information, some nuggets here and there on how to approach markets. Now I want to conclude here is one thing I also like to do personally is I see a nice breakout as far as this market is concerned, the Argentine market, and I want to check out what was going on at the time, because there's a lot of lessons we can learn, and I always want to find out what was going on. I want to take a look at this breakout. Very successful breakout we can see on hindsight in 2013, and after that breakout the market never looks back. It's been on a tear since then. We're talking about under 4,000 here, now at 20. That's an amazing run in a couple of years for a major market. So what we're going to do, we're going to take a look at that time period for that breakout and see whether it met the minimum requirements. So let's do that. So we're talking about this breakout month right there, and that's the time period we are looking, that's the window we are looking at. And clearly we can see that the RSI was, depending on where you want to draw this, draw it there or draw it here. Either way, we can see the RSI moving above 69.1. And we can also see that the breakout at that particular time was moving the smaller MACD setting to 3-year highs, if not all-time highs. Let's take a look at what was happening here in that time frame, that window, and we can see again even the main default MACD, as far as I use here, was also breaking out. So the minimum requirements for the ultimate Muathe breakout were met with the RSI above 69.1 and MACDs breaking out to 3-year highs, if not all-time highs. Keep in mind we always just look for one MACD to confirm that setup. So great move since then. This market has been on fire. Can it continue moving higher? We don't know, but based on the world market analysis I just did, which actually looks like it is the exact reverse of what happened in February 2016, where world markets were indicating potential for a bounce, and we got the bounce. Right now we need to look for evidence in the coming weeks that markets are starting to stall. If markets across the globe start stalling, then chances are your markets, wherever you're trading in the world, could also do the same, maybe even a major high, given how much movement markets have seen over the last couple of years. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings.